In this video, I'm going to talk to you about the dirty truth behind Forex prop firms. And if you're considering taking a prop firm challenge, or you're actively involved in a prop firm or trying to pass a challenge, then you want to make sure that you watch this entire video. In this video, I'm going to be explaining the math behind how prop firms actually operate, and it might be shocking to you. And I know this because we've been dealing with prop firms for the past several years. We've helped hundreds of our members become funded prop firm traders. We've helped many people get withdrawals, and we've also went through the process of setting up our own prop firm, which we ultimately ended up shutting down just because it didn't end up working out like we expected it to. But I want to make sure that you're aware of what you're actually getting into. Okay, so with all that being said, I know it sounds kind of scary, but the reality is that prop firms can actually be a really helpful tool. As you know, one of the beautiful things about prop firms is when most people start trading, right, they start trading with like a small account. Maybe they're starting trading with like $1,000 or $10,000. And this is not really something that can necessarily change your life. Like, even say, for example, you're a really good trader and you can do 10% per month consistently. I mean, you're really only making $100 or you're making $1,000 per month, which is nothing to write home about. It's nothing that you can leave your job on or anything. However, at the same token, if you're able to trade a $100,000 account, and I think one of the best parts about prop firms is not risking your own capital, and here you make 10%. Right now, you're able to make $10,000, and this can be life-changing. So I do like prop firms in that aspect, but most people aren't aware of how they actually operate. Now, as you know, prop firms have become all of the rage in the retail Forex trading world, and because of it, something's happened. Prop firms have now become a commodity, which is actually really good for us traders because there are so many different prop firms that prop firms are now having to compete with each other. And if they want to gain any potential share of the market, then they're having to make their targets easier and easier for people to get funded, because that's ultimately where people are going to flock. So anyways, I created this chart here called the prop firm comparison table. You can take a look at it. I'll include the link in the description below. But essentially, I went and I evaluated a bunch of these different prop firms, and this is exactly how they kind of work, right? They have a phase 1 and a phase 2 target, which I'm sure you're pretty much aware of, where generally you have to make about 10% profit. And on the second phase, you have to make about 5% profit with no more than 10% max loss and 5% max daily loss. And they all kind of follow these rules. Now, here's where it gets really interesting. Okay, so here's the math behind how prop firms actually operate. Now, the interesting thing is that prop firms actually kind of operate kind of like insurance companies do. Okay, if you know how insurance companies work, right? Let's say that you go in and you get insurance for your pet. Okay, you get pet insurance, and let's say that it costs you, I don't know, say it costs you $40 per month for your pet insurance, right? And you're paying this every single month. So over the course of a year, you're going to pay out $480. Well, all an insurance company is, they just know math. That's all they really are. That's all they really do. They know that, okay, well, hey, I know that on average, the average pet is going to need to be insured, you know, every year. Let's say out of pocket, this is actually going to cost us like $200, right? And this person, meanwhile, is paying $480. And so basically this insurance company, they basically makes the $280 difference. And this is how all insurance companies work. And this is essentially what these online Forex prop firms have essentially turned into. So the reality is that these prop firms, they actually don't want you to win. Unfortunately, they don't really want you to win, because when you win, that means that they lose. Just like with insurance companies, that's why sometimes with insurance companies, it's hard to get a claim, because, you know, if they have to pay you out, then that takes out from their profits. Now, the way that these prop firms work, right, is they have these tests, right, or these challenges, which, you know, range in cost, but like for a $100,000 cost, kind of the market price is like $500, right? And here's the real statistics behind it, right? We have a phase 1 target where we have to make 10% profit, but the reality is that really only like 18% or so actually end up passing phase 1, okay? Now, of the people that pass phase one, only about 30% end up actually passing this phase two. So this is phase one, this is phase two. So if we do the math on that just for a second, if we do 18% times 30%, it really means that only about 5.4% of these people actually get a funded account. Now, the interesting thing about the funded accounts are on the vast majority of Forex prop firms, these funded accounts are not actually live accounts, okay? These funded accounts are actually just demo accounts, okay? And the reason that this is like this is because if these prop firms are wanting to do this for US or Canadian citizens or UK citizens, then they can't actually offer them live funded accounts. It's actually illegal to do so under this sort of business model. So here's the reality, okay? The reality is that if we have, say, 100 people that take a challenge, okay, the prop firm is going to make 500 times 1,000. The prop firm is going to make $50,000, right? So the prop firm has $50,000 in revenue, and they know that only 5.4% of them get funded. Now, the percentage that actually get a payout is really, really small. It's like less than 1% of the people that take a prop firm challenge actually get a payout, which is really sad. And that's the whole reason why we created our prop farming blueprint, which is basically our statistics prove that we're increasing odds by like 10 times. So if you'd like to increase your odds by like 10 times, going over to propfarming.com. But this is the sad reality. Most people aren't very good traders, and most people shouldn't be actually, trading prop firms' money. I mean, they're just not good enough. They don't understand risk. They don't have a proper edge. They haven't had enough time in the market. And so the reality is that I heard that in reality, only like 5 to 10% of people that actually get funded actually end up making a payout, which is pretty embarrassing if you think about it, right? So if you just think about this, just for example, let's say 20% of this 5.4% that actually get funded end up getting a payout. That means that that's like 1%. That means that that's basically 1 out of 100 people that take the test actually get a payout. And let's say that this person, they get like I don't know, let's say they do really good. They get a $10,000 payout. So there you go. Okay, so the prop firm made $50,000, and then they have $10,000 in expenses, and they netted $40,000. Okay, so this is the math behind how these prop firms actually work. And again, I'm not saying that prop firms are evil companies. If you have an edge and you actually are a good trader, or you have probability on your side, then prop firms can actually be a really, really powerful thing. Now, I'm under the belief that, prop firms are something that you should use as a tool. And when you are able to actually start making money out of prop firms, I think it's a really good idea to then take that money and actually fund your personal accounts. Because with prop firms, the challenges and the requirements and the rules are very, very strict. And I would say that is one of the other benefits of prop firms is that because they do have really strict rules that are really, really hard, it really teaches you about like risk management and how to use proper risk. And so if you are trading prop firms, you're able to pass prop firms, then you have likely understood how to trade with proper risk. And again, if you'd like to more than 10x your odds at becoming a successful prop firm trader, then go ahead and check out propfarming.com. I think you'll find it really interesting. It's an automated trading strategy that we've been using along with hundreds of other traders that has been working really, really good for getting funded accounts and actually making withdrawals on them. And I made this video to show to people how a lot of these online Forex prop firms actually work. They're not really the standard prop firm, which would be a company that has really rigorous testing to bring in additional traders to diversify their strategies that they're trading with their funds, is how a normal prop firm would work. But a lot of these online prop firms like My Forex Funds, FTMO, all of these firms, for the most part, the way that they really work is kind of like this insurance model. And not saying it's a good or a bad thing, but that is the reality of how they work. Hey, if this video is helpful, then feel free to check out some of the other helpful videos on our channel.